Hello, sorry for the bit of the delayed start, some technical difficulties, but hopefully you guys can see and hear me okay. So let's get started with our solid as a stock session. I know it's meant to finish in about 40 minutes from now if you're watching live, but we'll keep going and we'll go over to get that full hour. Now let me just make sure that we have the disclaimers up there on the left hand side, so please do read them. As always with these kind of things, it's good to make sure that you understand what you can expect from these kind of videos. Now if you see me looking around, it's because I'm checking the tech and because I'm reading the chat boxes. So if you have any questions, or if you're watching live and you want me to look at a particular stock, please do just let me know and I will go and look at it. In fact, let me just make sure that I can see everything now. Okay, good. So let me just check this one more thing real quick. No. Okay, so let me just explain obviously what we're going to be doing today. Obviously it's a stock session. We're going to look at the current market environment and some perhaps new opportunities. We'll look at some closed trades and some open positions and just explain what we've done before. For anyone that's new to this, my name is Becky. My email address is here. It's becky@tradictiv.com. There's also support@tradictiv.com, so you can use either of those email addresses if you have questions or anything that you have queries on. There's also this link here, which is tradewithufos.com/Becky. From that, you can get apps and platforms, you can book coaching, and you can also come down here, ask questions in this open public environment, and then we can answer the questions there, and then everybody obviously learns from this space. So ideally that's where you'd go to ask questions. So what I'm going to start with is just looking at some trades that we put on last time, and what I'm going to do is just go start to finish in terms of chronological order when we place the trades, see what happened, analyze, did we win, did we lose, did we break even, are we still in open positions, did we cancel trades? What would we have done to manage these trades? So that way, if you were on the session last time or you watched the session last time, gives context to those trades as to what happened from them. But even if you've never joined us before or you weren't part of that session last time, no problem. You get an understanding of how we manage our trades. Okay, so let's go to this one. So we're going to start with Vonage or Vonage Holdings. VG is the ticker symbol that we used. This was a trade that we placed back on the 29th of October. We have there from our notes. So we placed it on the 29th of October, and on the last session, which was the 3rd of December, what we did there, so it would have been, yeah, around about this point in time, we moved our stop. So our red line got moved up and it's moved behind another UFO. So essentially, for those that might not know what I mean by that, we're just trailing our stop behind objective places on the chart that show us that we have more probability there. So our stop loss got moved up a little bit. So at the moment, the worst that can possibly happen is we make a little bit of money. Already, we're in a relatively decent amount of profit. The amount of risk on this trade was $100 in this demo account. So $100, we would have already banked 50 at our first target, and then we're still up 483. So I can't do the ratio on that, but more than 5 to 1 at the moment. So obviously, hopefully it continues up. We've got a trailing stop as our second target. We will continue to trail this stop up as it moves up and lock in profit. But worst comes to worst, if this was to drop from here, we would get stopped out just at a slight profit. Already banked a little bit, so we would have been in profit overall for this one. So that's VG. Then we have POR, that's the next one. Again, I'm just going to be checking the chat every now and then, seeing that everything's okay, she says. Obviously just want to make sure that you guys can all see me okay. I know we've had some technical issues, just want to make sure that everything's good. Okay, all right, no problem. So with this one, POR, this is Portland General Electric. This one is still open in profit. We've hit our first target, which is our safety target. So we've already banked, in this case again, $50 or half of what our risk would have been on our way to our T2. Got quite a way to go before we get there. If price were to come against us and hit our stop, it'd be a break-even trade. That's the worst that can happen now. If it continues on, we might trail our stop behind or close our trade if something from the climate side of things changes, and we might close out for a profit before we hit our target. For now, it's open, so we'll see what happens with that. Then we had, this one was a day trade, which was a suggestion by somebody in the session. RIVN was the 10-minute chart on the right. RIVN was the ticker symbol. I'm just going to go back in time on this one to just give us a little bit more. So back in time, we placed it here, and this is what would have happened. Great. So this one was a losing trade. It just went straight through, I believe. RIVN. Oh no, it was a cancelled trade. So let me show you why we would have cancelled this trade. So we were using an hourly chart. And again, I'm just going to go back in time because it's longer ago, or it's because it's a smaller time frame, there's a lot more candles in the way. So let's just take a look at this. So what we can see here is that we placed this trade on the 3rd of December, around about this time, when we had a confirmed downwards climate, when we had a thick red dot, probability down. However, by the time it got back to the point where we could have entered, which was here, which was the next Monday morning in the afternoon here, my time, by that point, the autoclimate would have changed and the EMA was nowhere near where it needed to be. So overall, we were in a position where the reasons we placed the trade in the first place were no longer there. So we would have cancelled this trade. So this would no longer be a trade. We wouldn't have even been in it. No wins, no losses, no break-evens, just a cancelled trade. It wouldn't have been in it. Then we have Plug, was the name of this next one. Plug Power. So this one again was a weekly on the left, and I think it was a 3-day on the right. It'll tell us in a minute. Oh, it was a daily and a 55. I was wrong there. Daily on the left, 55-minute on the right. I believe with this one we also cancelled it, unfortunately, obviously, because this would have hit our second target if we were to be triggered into this trade. But unfortunately what happened, we placed it on the 3rd of December when price was around about here, sort of relatively close. And of course price continued to move down, came back up, didn't hit our entry and fell again. So we missed out on this one, unfortunately. Cancelled trade for that one, wouldn't have been in it. Then we had FNF. Oh, I don't know what happened there. FNF. And this one again is an open trade, not yet hit our safety target. This would have been placed on the 3rd of December. So yeah, entered around about the 3rd of December, and we've just sort of hovered around our entry price here. So nothing really to report back on there. What time frames did we use? It was a 3-day on the right and a 1 week on the left, just to see the context of what it looked like at the time. So yeah, we're still in this trade. Not really much to say other than that it's open. It may lose, it may win, it may break even, we may cancel it. There's no need. Oh, actually, I've just realised something. We would have cancelled this trade, but after we were triggered. So let me just back up and explain this. So if you left it and you hadn't have looked, like I didn't just look now, then you would be in this trade slightly at profit, open, waiting to see what happens. However, we placed this trade on the 3rd of December, which would have been at the end of this week, when we had a thick blue dot. Now, it triggered on that week, so it triggered on the 3rd of December. So we would have still been in that trade, we would have been triggered into it. However, as we see here, and let me really space this out to show you. This week, the start of this week, the 6th of December, would have been an unconfirmed climate. And therefore, if you follow the rule that we cancel trades when the climate changes, well, we would have just closed this trade. So we would have closed the trade on the 6th of December, which might have meant that we closed it at a very slight profit. You're talking pennies, a couple of dollars worth of profit that we would have closed this trade at. So call it break even. Let's say you closed it at round about your entry price. It was actually just above it, but let's be pessimistic with that one. Let's assume you closed it and you made nothing, you didn't lose anything. it was a break-even trade. Now, obviously, the climate has now confirmed itself again to the upside. So if you'd left it and you're still in it, you might as well still be in it. No point to cancel it now. If you'd have been checking in regularly, which we should do in our trades, you would have actually cancelled this trade after it was triggered at a slight profit, call it break even. So that's on that one. Two more to look at before we look at new opportunities. FOE, Ferro Corporation, or Ferro. This one would be open. Nothing changed in terms of our climate. We were triggered. Yeah, we would have been triggered after we placed the trade. So yeah, we are in this trade, just waiting to see what happens. It's on its way to our safety target. It could come back against us and stop us out. It could be that the climate changes and we get out early. Could hit our targets. We'll see, but that's open. And the final trade, which is here. And again, I'm just checking if everything is okay with the chat. Again, I know it's probably annoying if you're watching this just to watch me fiddle about with my tech, but again, I just want to make sure that everything's okay and that everybody can hear and see me. Okay, so Virtu, I don't know how to pronounce that, but Virtu Financial, Virt, or Virt. This one would have been a break-even trade because placed it on the 3rd of December. It would have entered on the 3rd of December. Everything was still lining up. It moved away, hit our safety target, which is 1 to 1 away. So we made half of our risk. Then it came back against us, hit our stop. So we lost half our risk. So overall, break even. Made half, lost half, break even trade. So overall, on the trades that we've looked at, we have 3 open trades that are all in profit at the moment. 3 cancelled trades, one of which would have been after the trigger and closed at a very, very slight profit or a break even. And we have a break even trade as well. Yeah, so that's what we got. So that's what we did last time. So it gives context, like I said, for those that watched us last time and know what trades that we placed. Also, for those of you that might not have seen it, you get an idea of how we manage our trades, why we might close them out early, and what constitutes a winner, a loser, a break-even trade, or a cancel trade. Okay, so that in mind, let's now look at new trades. Let's look at new opportunities. So I'm going to use the Tradictive Options Planner, top, that's our platform. The data is coming from TradeStation, so for those of you that have a TradeStation platform, you can use it. Or of course you can use the one that we were just on, which is TradingView. And again, as long as the data is coming from the same place, you'll see roughly the same thing. But what's most important is, of course, the strategy that we're using, the way we're thinking about it. Now, I'm going to start with a weekly chart on the left-hand side. The right-hand side, I'm going to use different time frames. The time frames I'm going to use are the 144 minute, the 1 day, the 2 day, and the 3 day. Now, why am I doing that? I'm doing that because there may be better opportunities on the 2 day, or on the 144, or on the 3 day, or on the 1 day. We don't want to be so strict on the right hand side, because all the right hand side, all of the edge time frame, the point of that one is that we get in to a trade going in the direction that we get from the bigger time frame. We already know what direction we're going in, up or down. The point of the right hand side is to get in more specifically. That's all it's for. So any one of these, because they're lower than this one, any one of them show us a more refined place to get in, which is the point. Now notice I'm not saying let's go down to a 5-minute chart or an hourly chart or a 30-minute chart. We're not going to go too crazy. We're not going to make a decision on whether or not we buy and sell on a weekly time frame on our autoclimate and then try and get in on very, very tiny 1-minute charts. So they're still relatively similar, but we can still choose between a few of them. So these are the timeframes that I'm going to use on the right hand side. Now, having a look at the S&P as a whole, we have a confirmed upwards climate at the moment. So I'm going to look for stocks that also have a confirmed upwards climate. We're going to cycle through them until we find an opportunity. If you're watching live and you have any suggestions, let me know, and I will have a look at perhaps different opportunities if you guys let me know what they are. So with this, let's have a look, and we'll go to our filter. I'm looking at all stock symbols, minimum price of $15, minimum average volume of 300,000, all US stocks and ETFs. And all I'm doing is filtering here by our weekly confirmed upwards climate. So in layman's terms, for those that might not know what it means, probability upwards on a weekly chart. I'm looking at sensible, meaning towards the start of what would be a normal move to the upside. And I'm looking for near the 9 EMA, meaning close to an ideal trading price. That's what we're looking for. So we'll click scan and we will see what we've got. We've got a reasonably long list here. So what I'm going to do to try and filter this down a little bit further, I'm going to come to the earnings tab and I want to exclude earnings that come out within the next 5 days. So exclude stocks that have earnings coming out within the next 5 days. It's not really done much to our list, but hey, here we go. So we're going to filter by symbol, and the reason I'm doing that is because if you filter by something that's price-based, which of course moves, it might be that we accidentally end up looking at the same symbol twice. We normally do A to Z or A to Z, so I'm going to do it the other way around, and we'll go from the bottom to the top almost. So starting with THC, which is Tenet Healthcare, not the active ingredient marijuana. Let's have a look at THC. And again, we'll look at what opportunities we have. I'm just going to put the EMA on here because for some reason it's not on here. So we want a 9-period exponential moving average, and I'm going to make it purple. There we go. Okay, so let's have a look at what we're doing. I'm just going to look one more time. I know it's annoying if you're watching, but no problem. Okay, great. So again, let me know in the chat box if you need anything. So with THC, we have a thick blue dot. On our auto climate, that tells us probability is upwards. We should look to be buying. Now, where should we look to buy? We should look to buy at a UFO on the edge time frame, and then we'll look at different ones. That coincides with the EMA price, which is really hard to see because it's very close to current price right now. But the EMA price is 73.84. So the EMA price, 73.84. Let's take just a line. There we go. And I'm just going to move this to 73.84 so we can see visually. 73.85, that'll do. So we can see as we go through these time frames, do we have UFOs around there? What I'm also going to do, just to give us a little bit of an extra probability booster here, I'm going to show UFO stats. And we're going to want to make sure that whatever we're looking for is above 50% up here, because essentially what it's telling us is that it has a higher probability. So just to confirm, this is what we're doing. We are looking for a thick blue dot. We are looking for green UFOs that coincide with the EMA value, which in this case is 73.84, that are higher than 50%. So basically we're just looking for a checklist of criteria that's been ticked one by one. So at the moment we don't have a UFO that's meeting the EMA price, so we change to a different time frame. Oh, not 2 seconds, 2 days. And we see what we've got. And I also accidentally changed the, there you go. So nothing on the 2-day, nothing there. We'll go to the 1-day, nothing there. And then we'll go to the 144-minute, which are just loading for now, but I doubt we'll see anything around there. We'll have a look. 144-minute. It's just loading at the moment, as we can see. Nothing there either, so no problem. We are going to just go through these one by one, clicking on each of the stocks that have appeared in our list, and see what we've got, see what works. So this is 26.68. So let's take a line. Wrong way. I'm just going to delete that for now. Let's take that line. So it's 26.68. There you go. So that's where we are looking for UFOs to be. If they aren't here, and as I cycle through time frames, if we don't find them, we move on to a different opportunity. It might seem, for those of you that are watching for the first time, you're going, what? What's an autoclimate? What are these dots? What are these lines? What are those rectangles? What are the circles? What does that number mean? What's an EMA? If you go back and look at a lot of our videos, it puts a lot of these things into context. But for those of you that have been with us a long time, as I'm flicking through, you know what we're looking for. We're looking for the right setup. And if we find the right setup, then great, we're happy. If we don't, then no problem, because it's not... so what do we want? 47.05. There's no point placing a trade if we don't first have probability that it's going to, well, not definitely going to work out, but have higher probability to work out. So that's what we're looking to do. We'll put it around there. When we're looking for these different opportunities. And if we find them, great. If we don't, fine. No point placing trades for the sake of it. So nothing on any of those, and we'll go back one by one. This is ROIC, Retail Opportunity Investment, maybe? So 18.3 is the... 18.3, there it is. Roughly there. And again, we're just going to cycle through until we see green UFO on that line. If we don't see it, we move on. This is the really great thing about using technology in this way, that it makes it so easy. All I'm looking for, I find this number, which is 72.05 in this case, which is really close to current price. Really, really close. I draw it on the chart roughly. 72.05, that'll do. I cycle through time frames and I see if there's a green box near it. That's it. And it sounds really rudimentary, doesn't it? It sounds really basic. Obviously, there's a lot that goes into it in the background, and the technology does a lot of the work for us, which is great. But all we're doing is saying we want to make sure that the criteria that we hit, so that's going to be 20.48, which is down here. Interesting, it's all the way down here. 20.48. Yeah, all we're doing is looking for criteria to be met. The technology is doing a lot of the work, a lot of the thinking for us, which is nice for us. But ultimately, we're still the ones executing and following this strategy to say, do these things add up? Yeah, great, I didn't need to calculate anything. Yeah, great, I didn't need to find where the buyers were or use my eyes to figure that out. 98.45. So you don't need to do those kind of things, but we're still the ones that are saying, okay, based on our understanding of what this technology tells us and based on our understanding of what this technology is trying to do we have the right setup? We still need to know what that means. We still need to know what the right setup is so that we can filter through and look for it. And if we don't find it, we need to be the ones to be decisive to say, nope, I'm not going to place a trade that does not fit the criteria that I want it to fit. So 40.38, it's about there, roughly. Again, it doesn't need to be, at this point, it doesn't need to be that exact. It's just to give us a visual to easily see if we have UFOs in the right place, which we do not, which is fine. Okay, 50.54. 50.54. Oh, it's very close here, but unfortunately not close enough. So 50.54-ish. That is very, very close to current price as well, which is yeah, unfortunately. Yeah, nothing lining up. It was close, but nothing lining up. Huntsman Corporation. And it's funny as well, because you guys, I'm sure if you watch some of these sometimes, you'll see us, we'll look at the first thing that pops up and it'll be great, opportunity immediately. And that's great when that happens. I'll be honest, doesn't happen very often, which is good, because we don't want to be placing a bunch of opportunities all the time if they don't have the probabilities. So it's fine that we do look through for a bit, because we don't want to be placing trades for the sake of placing trades. We only want to be placing trades that actually make sense to place, because they've got probability of working out. But yeah, sometimes you'll see these sessions and we place trades and they happen immediately. And that's great. And it's easy. And sometimes we just have to click through them. And sometimes we don't find any. It's very rare we don't find any. But sometimes that does happen. And we need to be prepared for that as traders. That there is no point placing trades just because you've decided to sit down and place a trade. Doing that, so 40.40 here, doing that is much more likely to lead to losses. And nobody wants to trade to lose money. That's never anybody's intention when they're trading. Oh, I just want to lose money. That's not what we're looking to do. Okay, so let me show you here. We now have an opportunity, finally. I was hoping we'd find something, and we have. More often than not, there is at least something to do when we trade. But of course, sometimes not. So we've got a weekly on the left and a 2-day on the right. That's what we're looking for. So just to make a point, and again, for those that might be newer and maybe this has been confusing so far, I'll take this moment to just sort of break it down bit by bit. We firstly wanted to look for stocks that had probability upwards. That's what the auto climate tells us. On a weekly chart, there's probability up for this stock, which is Hawaiian Electric Industries. Probability up. Thick blue dot, probability upwards. Brilliant. Now, if we're going to buy, we want to know where to buy. For us, we buy when we have a green UFO, so buy orders, at the same price as the EMA value, which in this case was 40.40, the EMA value that comes from the bigger time frame. Because what we're doing there is we're combining buyers, which is what the UFO shows us, buyers, with more buyers, because people buy at the EMA price. In the context of an upwards climate, buyers. So it's buyers, buyers and buyers. That's why we buy there. Now, we also want to make sure we have a decent enough probability. This is way over 50%, which would be the criteria we look for. So happy days, we have a trade. So I'm going to put this information in. Oh, and then we'll go to TradingView to actually place this. So it's 41.03 is the entry. The stop will be 39.47 because we're going to take off 10 cents to just give it a little bit of wiggle room there. We are currently within this UFO at the moment, so we might actually get in a little bit cheaper and therefore reduce our risk. We'll figure out our target 1 in a second. Our target 2 would usually be red UFOs. So it might look like this. Red UFOs. Somewhere on the left-hand side, it will be the closest red UFO we have. We don't have any, in which case it's going to be a trailing stop, is going to be our target 2. So let's bring up TradingView and go and have a look. So HE, Hawaiian Electric Industries. 1 week on the left, 2-day on the right. And let's draw this roughly in. So it's going to be roughly between where we are right now, which is 40.97, to it was 39.47. So that's going to be our difference between our entry and our stop. We'll go to our control panel. It's one of the reasons I use TradingView for this bit. We'll go to the control panel because this will help figure out what our risk is, how many units we use, meaning how many shares, and where our first target will be. So what I'm doing here, I've put in the entry, which was 40.47. We got that. It was actually going to be 40.94 now, which is current price. Brilliant. We'll bring that down a bit. So 40.94 is going to be our entry, and that's only because price is where it is now, so there's no point buying it more expensive than what it is now. We might as well buy it at what it is now, cheaper. If we want to risk $50, which is what we do, just as an example, $50 for each side of the trade, then it works out for us how many units that is, which in this case, I think it's going to be about 34 shares. Now, our risk is 147 cents, $1.47, so we want 147 cents worth the other side, so that our risk and our reward for our target one are the same. So, let's draw something on there as well. So, our target one, she says, I'm going to put a horizontal ray on there just to see it easier. It's 42.41, and this came in a little bit lower, so it was 40.94. Our second target, so 40.94, although actually price is now 40.91, so we'll go there. It means that we've got slightly different stats for one half versus the other half. However, better that way than to buy it for more expensive than what it's worth. So $50 risk, same kind of thing. 34 units we'll use. We're getting in slightly lower, and we are going to have a trailing stop on this one, so we won't put in our target. So that is everything. That is this first trade, this first opportunity put in. Let me just put a little note in here. So placed on the 17th of December. 1 week and a 2-day, and T2 was a trailing stop. This was also placed in the live session, meaning streaming to different places. What I'm going to do, because I know we've got technical issues and I'm not sure I'm streaming everywhere anyway, what I would usually do at this point is cut the stream to the free places and continue within the closed coaching, but I think that might be the situation that we're in already, so I will continue just where we're at and keep on. Steve, I'm so sorry, I didn't see you there on the chat, so hello. Sorry if I've been ignoring you. GPC is a potential long setup. Steve, if you could let me know what the time frames are that you're looking at, that would be great. GPC, so we'll look at a potential new setup there, and then I can see as well you've put a different suggestion for a short setup, so we'll look at that as well. But let me know, Steve, what time frames you're looking at. If not, I'll try and gauge by what I see in front of me. Assuming for the time being that you're... So 144 on the right, assume weekly on the left. Cool. So 132.18, roughly there. Again, not too exact. 144 on the right. Brilliant. Great. Okay, so yeah, that is a setup. Thank you, Steve. Saved me some time. So let's place this trade as well. So weekly on the left. Brilliant. Okay, so GPC, which is genuine parts, GPC. 1 week on the left, 144 on the right. This is a long. Our entry will be 133.20 and our stop loss will be 131.14. Our second target is going to be a trailing stop again. Nothing to show us what we're looking at there. So a trailing. Great. Okay, let's go place this trade real quick and then we'll keep looking for some new trades. I'll take a look at your short opportunity as well, and then we'll keep circling through looking for some new stuff. GPC, 144. Let's just get rid of that for now. It's just taken a second to load there. Okay, so it was around here, I believe. So the entry was 133.20. The stop loss was 131.14. So let's figure out what T1 will be. So target one. So again, I'm just putting in the entry and the stop loss so it works out for me what the risk is. I put in how much risk I want in dollars. It will work out for me how many shares that would be. I can put in and just copy over what that distance is between entry and stop to find out what the distance is between my entry and first target, and it works it out for me. hopefully see why I like using it. It does a lot of the maths for me. Great, so that's that one in. Great, and then the second one was of course a trailing stop. So same thing we did last time, where the entry and the stop loss are the same, the risk is the same, but no target is put in. So placed, live, I think we might be live, who knows, we're having some technical things at the moment that make it hard to see where we're at, but placed live on the 17th of December, target 2 is trailing, 1 week, 144 minute. Brilliant. Great, so CINF is a potential short. That's a good thing to switch it up a little bit and look at something that might be a little bit different. Now bear in mind, if we place trades that are going counter to what the market as a whole is doing, that's absolutely fine, because this stock specifically has those statistics. It's more important that we're placing trades based on the statistics of the thing we're looking at, not something it's correlated to. But just bear in mind that if it's going against what the market as a whole is doing, then we might have a little bit of probabilities against us, but not a lot. I'm assuming, by the way, Steve, same time frame, so 144 on the right as well. What I might do here is have a look. So 177.82. Let's just draw that. 177.82. That's going to be, oh, sorry, 117.82. Correct. Okay, cool. So I'm going to be strict here, not to be pedantic, but just to show how we think about these different rules. And people will have different rules, by the way. So for us in general, we would say 50% is the minimum that we want that to be. I say in general because that number is a direct reflection of your personality and your risk profile. The lower that number, the more trades you can place, but less of them will work. The higher that number, the fewer trades you can place, but the more of them will work. As long as you still make money, it doesn't really matter where you are on that spectrum, as long as it still overall works. If you place trades that have a 30% chance of working, but when they work, they make you a lot, and when you lose a little bit, doesn't matter, still profitable. If you're comfortable with that, great. If you're not comfortable with that, don't do it that way. So we use 50% when we do our sessions, just because it's neutral, right? It's in the middle, and it gives us something to say, this would be what the rule is. If your number is less than that, by all means place this trade. If your number is higher than that, don't place the trade. What I'm going to look at is different time frames, just to see if we can find something similar that gives us a better number. Unfortunately not. So I'm just going to come back to where this UFO is. So everything is lining up on this apart from this number, which again, that number is kind of subjective as to where you place that as a rule. So just for those whose number that does fit within, thick red dot, probability downwards. If you have probability downwards, you should probably sell or short. Now we want to sell where we have red UFOs or sellers at the same price that we have our EMA value, which comes from the bigger time frame, because then you're selling with sellers and sellers in the context of a selling climate. So with all of those things in mind, this would be a perfect setup. You also, just looking at the numbers, you're likely to have at least 1-to-1 gap before you hit a bigger set of buyers, which is good. The only thing failing this, and the only reason I won't place it for the sake of the group, is just because this number isn't higher than 50%. But if your number's less than 50%, by all means, great setup. Please place it if you want to. Okay, so let's have a look and come back to our list and just keep going. So did we look at HPE? I'm not sure we did. So that's 14. Oh no, we did, because I drew a line. That also helps me to know if I've been looking at something. H, hydrogen symbol. Hyatt Hotels. So 83.18. So very, very close to current price. I'll try and keep my eye on the chat box a little bit more now, Steve. So sorry if I did ignore you for a bit to start with. Wasn't my intention. Okay, so let's have a look. Let's cycle through, see if we can find a UFO. And we do not. No problem. Moving on. And we'll keep doing this, and I'll keep checking in on the chat box to see if we can be placing some more trades before we close out today, which will be in about 10-15 minutes, because of course we started a bit later. So 40.14. So round about there. Again, I'm not being too specific because it's only really there as a visual. I'll double check it, of course, if we find anything around there. Nope. FE is a potential long setup. Thank you. Let's come back to fun. We'll have a look at FE and then we'll come back to fun. Great. So FE, First Energy. I was looking through my log the other day. We seem to place a lot of FE trades, so I guess they often line up where we want them to line up. So 38.86. The only potential thing with this one, although I still think it could work, is that because it's a little bit further from current price as a percentage of itself, if that makes sense, because the EMA is a little bit further away than current prices, it gives it more time to perhaps be cancelled or for things to change. But at the moment, it's all lining up. The EMA is at the top of this UFO, which I like, so that's good. So we've got a thick blue dot, probability upwards. We've got buyers with buyers in the context of a buying climate. We have a number that is 50% or greater, and we have room for this to go up because we don't have any sell orders for quite a way. Now, I'm just going to check and just cycle through some time frames, see if we can get a better number. So by going to a daily chart, see we've got 53% there. Let's go to a 2-day, nothing on the 2-day. And on the 3-day, we have 59%. So I'm going to go with the 3-day chart because the 3-day chart gives us a better probability, and therefore the numbers are more likely to work for us. So we will take that one. Nice one. Thank you, Steve. So let's put this in again. So we're live. We are FE 1 week and 3 days. Okay, we are long. Entry will be 39.12. Yep, the stop loss will be 37.53. And our final target, our second target, in this case is going to be 51.21. Great, cool. Let's have a look. FE. Let's draw it. Yeah. I think it's about here-ish. It's 3 days. Okay, so the entry price was 39.12. Stop loss price 37.53. So it's around about there. Let's squidge this down. Our final target was all the way up here at 51.21. Let's squidge that right down so we can see it. Look at that. I love it. It's nice when you see the EMA just sitting there nice and perfect, just waiting for us, which is great. And because it's a reasonably big zone as well, I mean, it's not huge, but it also means that even if price comes down, the EMA's not going to. If it comes down from where it is now, the EMA is not going to fall out of this UFO, which is good. 159. So T1 is 40.71. That's very close. Go away. Okay, so we've put our entry and our stop and our first target in, and let's do the same now for target 2. I hope we get triggered on this one. I don't know, I've got a good feeling about it. I shouldn't say that. That's not a very objective thing to say. But, I don't know, everything lined up very well. We got check, 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 check. We've actually got a specific target 2, high number on that percentage. So yeah, hopefully we'll get triggered on this and we'll see what happens. So target 1 for that. Let me just put it in my log here, 40.71. Brilliant, thank you, Steve. Let's come back. We were looking at fun. Let's have some fun. Bad jokes. So 47.83. It's going to be around here, roughly. Again, not too specific for now. When it's very close to current price, we're actually often unlikely to find something that lines up, but still worth looking at. So no fun for us, unfortunately. FULT, Fulton Financials. Again, very close to current price. It's only 5 cents away right now is where the EMA is at. So, again, I would say we're unlikely to find something, but we'll see. The reason, by the way, some of you might be thinking, why would it being close to current price change anything? It's because where current price is, obviously it's moved. So if there were UFOs around that price, they might have already been used, or they might have already been, like the orders have already been soaked up because current price is already there. If you understand how orders work, that makes sense. If you don't, that probably doesn't make sense. So sorry if I have confused you there. But essentially, let me try and... so let's say we had a UFO around here before price got there. So when price was up here, we had a UFO. By the time price gets down there, it's come in and it's eaten up the orders. By price moving through buy orders, it's eating them up. The app only shows us where buy orders still are, not where they were. It's where they are. So, round current price, we're less likely to see UFOs just because, you know, price is already there, which means it might have already eaten up some of our opportunity. Okay, so FCPT, nothing there. So this is Four Corners Property Trust. Nothing on there. Gonna just check in chat boxes and things. By the way, I know it's no C, but it feels a long time no see, Steve, since the last time we were in a session together. But I think that's just because when the last session was, it was a while back. But nice to see you anyway, is the point. So similar situation, very close to current price right now. Unlikely to see something, but we will try. Okay, nothing there. CRTO. This is literally where we are right now. Yeah, it's 5-6 cents away. So let's just see anything around current price rather than draw a line right now. Nope, nothing there. CMP. When we get to the end of the list, we will finish. How's that? So 76.79. Sorry, 26.79. Have you got some time off planned, Steve, in your holiday break? Hopefully. I don't plan on doing anything. No trading, no nothing. just gonna chill out. So on CNP, okay, so we may have an opportunity here, although just going to check something just to see, and then I will explain what my thought process is so that you can see why I'm hesitant on this one. 25.65, so that'll be $1, so it'll be 27. Yeah, okay, this still works. Cool. So this trade may not work out, and the reason for that is because the EMA is just above the UFO. If price comes down, the EMA is likely to move down. Price would need to move 60 cents ish to get into our UFO, which means the EMA only needs to drop 10 cents. So it's likely to work out. We don't know that, but it's likely to work out. So we will place this trade. Of course, keep an eye on it if you place it. There's no point, obviously, having a look at stuff. Sorry. There's no point not having a look at stuff, placing trades, not checking them, and then wondering why they don't work out if suddenly the setup doesn't work anymore. But this is what we'll look at. So it's weekly on the left, 2-day on the right. 26.65 will be the entry. 25.65 will be the stop loss. Our target 2 will be 28.17. So I think just over 1-to-1 away. And I've just seen there, WAB may be a short setup. So let's place this one, then we'll look at WAB, and then we'll round off. So CMP. Okay. 26.65. Look at that, I did it perfectly. Proud of myself there. So 25.65 is the stop. Let's put this in. 26.65. 25.65. We'll say $1 away. $50 risk. Boom. So that's in there. So 27.65. And same entry, same stop, same risk, and our profit was 28.17. So it's not a very big profit, but still fits the rules. Overall, you'd average out on this just slightly over 1-to-1. But still, like we said, better than nothing. Okay, so let me just put this in here. So 27.65, great. We'll have a look at WAB, which was a suggestion there. Sorry, not on this one. Suggestion there from Steve. And then we'll wrap up. WAB. Cool, so if this does work out, great, okay, brilliant. So we have thick red dot, like that, probability downwards. We have our EMA is 91.27, which is in there. We've got a couple of UFOs on this time frame. We'll look at different ones to see if we can either get a better number, tighten it up a little bit. What's also good with this one is we're also within weekly sellers. That's even an extra on top of it, a nice bonus there for us. So let's have a look. So 91.26 it was. So nothing on the daily. We saw the 2-day had some. The 3-day does as well. But I think the 2-day, oh no, 3-day has a better percentage. And let's check the 144. Let's wait for this to load so we can see what this number is. The only reason I hummed at this is because this is a smaller zone. So if it has the same probability, we'll take this one. Now, this does have a decent enough probability, but obviously 54% is less than 61%. So it's up to you guys. I'm going to take the higher probability one, but I'm just going to talk through why somebody might pick this one. This one is a smaller zone. So the distance between what would be your entry and stop is just over $1.20-ish it'll end up being. Which means it's only got to go $1.20-ish to hit your first target or to hit your safety target. We take the bigger one, because we've got UFOs that overlap each other. The distance between our entry and stop is $7-ish, which means it's got to go $7 whole before it hits our safety target, which of course is not what we want to do. I'm just thinking actually, it might be that using the bigger time frame invalidates itself anyway because of these buyers. So let's just put these numbers in and we'll have a look. So it'll be 90.19 to 97.22 it would be. So I'm just going to work out where 1-to-1 would be away for WAB. Same here. Because if it invalidates itself on this time frame, we'll take the smaller probability because it's still a valid trade. It's still over the numbers we want it to be. So that would be 83.16. It's going to be tight. Yeah, okay. So 1 to 1 away puts our target one within or past our target 2. Our target 1 should always be closer to us than our target 2, because the point of target 2 is that it's far away, gives us a decent reward. Now, if we take the 3-day option here, we invalidate ourselves because we don't have enough reward available to us because of the size of the zone we have to take. Might have a better percentage, but there's still no point. There's no point having high probability if you can't really make any money out of it. So in this case, we're going to go to the 144, and we're going to use this one because it's a much smaller zone. It's only $1.20, which means our target's going to be much closer, much easier to hit, and give us a decent reward to risk ratio on the way down to the T2. So let's place that one. So live, well, I don't know if this happens to you sometimes. Sometimes with Excel, I'm sure it must be me pressing a button, but sometimes with Excel I press a button and it takes me to a completely different cell and I have to navigate my way back. And it's really annoying and I don't know why it happens. It must be me. I'm sure Excel works better than I do as a human, but still. So 1 week and then a 144. We're going short in this case. Entry is 90.42. Stop loss is 91.67. Our target 2 is going to be 83.79. So we'll go and place this trade and then we'll round off for the day. I think it must be my mouse because sometimes I click things and they don't work. Okay, so it was 90.42 to 91.67, and therefore 125 cents, so $1.25. Okay, so let's do around about here, wasn't it? Let's just draw this on. Go to 144. So the entry is 90.42. The stop loss is 91.67. Therefore, our target 1 is 98.17. Sorry, 89.17. Our risk is $50. There we go. Same again, so 90.42 is the entry, stop loss it's remembered, risk it's remembered, and our final target is 83.79, which is a 5 to 1. So overall, you're roughly 3 to 1 overall out of this trade if we were to be right on both of those. Let's draw this in, or put a little note in to remind us for next time. So placed 17th December live. It was 1 week and a 144. And we don't need to know anything else because target 2 makes sense. And there we are. So we have placed 5 trades today, 2 of which came from you, Steve. So thank you. Really great when people suggest things, because it gives us something that to use and go and look at that we know is what you guys want to look at and what you guys are looking at and what you might need help with processing the methodology. So hopefully that's been helpful. This will be the last stock session, or the last session at all, in terms of the hour-long sessions that I'll be doing before Christmas. So I will say to you guys, have a wonderful Christmas and a wonderful New Year. I will see you, I think I'll actually be back sometime between Christmas and New Year. So I'll see you on that session. Hope you guys have a nice relaxing one. Hope you chill, hope you drink, hope you eat, hope you are merry. Have a good one, and I will see you soon. Any questions, you know where to go. Just as a reminder, tradewithufos.com/Becky or Becky@traddictiv.com. Otherwise, See you soon. Happy holidays. Take care. And have a good one with the family there, Steve. Take care. Bye-bye.